that Trevor?
That is Trevor. Good afternoon, Chris and company.
How are you?
Excellent. Yourself?
Well. Renee, you've got that eyeglasses up look. Hey, Bill.
Hi, Chris.
Are you off the vineyard?
Yeah, we're out in Colorado. Anything to avoid the Texas heat.
Well, give folks a little bit more time. Adrian, we got you back.
Yeah, I can't log in on my laptop for some reason. I'm on the phone. I don't know why.
Well, it wouldn't be a breakaway resilience call now 19 without asking you, should we get our booster or not?
Absolutely, 100%.
All right, get the booster.
And the flu shot.
And the flu shot. Okay, good.
And if you're over 50, a shingle shot.
Or two.
No,
Isn't it two shingle shots?
Sorry, what was that?
Isn't it two shingle shots?
Yeah,
It
two.
is. It is 2 shingle shots. Yes.
That sounds
Not to
painful.
reveal my age or anything.
You definitely do not want shingles, believe me.
I've heard.
Hello, everyone. It's nice to see your friendly faces.
Luis Robles. Welcome to Resilience 19.
I'm excited.
All right, Meryl, how are we on numbers versus RSVP? We'll give it one more minute, then we can jump in.
We're a little shy of commitment.
Okay. My suggestion is maybe we jump in. All right, welcome to Breakaway Growth Resilience 19. Thrilled to have all of you here. It's the second half call, so just as a reminder for those that weren't in last time, our last one was in March, and this is sort of the cadence we're going to keep on these calls. So the next one we'll be getting together, we'll talk about is in March. We're going to do a little bit of outlook on macros. Pleased to have Kim Fennell in here as well with us from California. And Evan, I may call on you too. So just not to cold call on you, give a little bit of update on what you guys are up to. And I also had the pleasure of catching up with Renee when I was in Boston recently. So have her come in as well. So with that, I'm going to jump in to the deck. And then per what we do in all these calls, Meryl will be getting the deck out to everybody afterwards. Happy to take questions now or also after we're gone through. Okay. Can everybody see that okay?
Yep.
Awesome. Okay. So the agenda is a little bit on how the portfolio is doing, what we're seeing in the macro. I did ask Bob Posen when I saw him just in the vineyard earlier if he'd talk a little bit about the macro. Bob, hopefully that's still okay.
Sure.
Awesome. All right. So I'm going to jump into that fairly quickly. So when we started in 2018, this was the idea. We're going to go invest in some awesome founders and everything would be very easy and straightforward. A couple of things have kind of happened along the way. In terms of the macros, they're just to call some straightforward things out that I think are well understood by everybody. But 2023 is going to be another funky year. It'd be nice just to have a regular year without anything odd happening in it. But I think unfortunately that's not in the cards for any of us. The big things that have happened since we spoke last was Silicon Valley Bank's collapse. Combined with that and related to it pretty directly was the Fed increasing interest rates. We're now at a 22-year high at 5.5%. That in part contributed to SVB collapsing, but also pulling liquidity out of the market, driving up risk and uncertainty. Obviously, the war in Europe continues, does not help. And then US versus China and Russia tensions on the political and economic side is changing the geopolitical landscape, and that's having direct impact on economic opportunities for our companies. And then related, but not as directly, and we'll talk more about this later, the impact on US VC capital concentration and contraction on new and existing funds. Interestingly, though, there's a counter force with China, Europe, and Israel having issues. US does look like a relative safe haven, so that's helping mitigate some of these issues. And then there's a bit of a question here on whether or not we've got a dead cat bounce on venture, or is the IPO markets really opening up? My gut is it feels more like a dead cat bounce. You're seeing the companies that really have to go to public markets to raise capital because of the capital consumptive need of their businesses. So not the strongest companies trying to go public. Stripe tried to go out earlier in the year, ultimately had to pull that IPO. You probably saw Instacart trying to get out, this week, but a meaningful pullback in terms of what the value of that business is. We'll see if that IPO is ultimately successful. If it is, I think that's a really good sign because I don't think it's a particularly strong business. One more slide, and I'm going to ask Bob some questions. So when we started off in March, these were, the big factors that we're worried about in terms of macro risk, inflation outlook, impact on interest rates, equity market performance. And you can kind of see this in some of the S&P numbers where, somewhat a little bit surprising to me, we're still seeing some pretty high relative to historic numbers, price to earnings on the S&P and price to sales on S&P relative to all the headwinds we talked about earlier. But Bob, do you want to weigh in on sort of your thoughts and your lens on markets?
Well, I think the people who feel like we're going to have a quick move out of higher interest rates and are misguided, because I think that as long as the war continues in Ukraine, that has a significant negative impact on food and energy prices. And I don't see how that war winds down in the near future. I also think that the undermining of global supply chains will add cost across the board and is a negative. So I think we probably reached the high point of inflation, but I don't see inflation as getting very down very quickly. And therefore, I don't see the Fed cutting rates very sharply. I think the Fed's likely to stay where it is for a while and see how things go. I think companies are learning to deal with the new situation, but still they've had to absorb a lot of labor cost and increases, and that's moderating, but still quite significant. And secondly, their supply chains are becoming more costly. So the good news is that the worst of inflation is probably behind us, but I'm not sure how much we could count on going forward in terms of a sharp decline in inflation or the Fed cutting rates sharply. So that implies that the stock market, which has done surprisingly well this year, hard to see that it, keep going up the rest of the year.
The one other factor that Bobby didn't mention, but just curious if you've got a point of view on it, being in DC earlier in the year in April, just the inability to kind of detach legal immigration into the U.S. from illegal immigration, and putting a downward force on net new folks coming to the U.S. in terms of labor need. And so it seems like, unemployment being where it's at, continues to be another factor that's kind of putting pressure on inflation on an upward basis, and no sign of that changing anytime soon.
Yeah, I would agree with that, that the politics of that are so nasty that there's no real chance of a quick fix. And the court just invalidated the Dreamers. So even that issue, which I think there's more or less a consensus on, even that doesn't seem like it's resolvable easily.
Any questions for Bob or myself on the macro? And Bob, again, appreciate you jumping in there for us. Bob didn't say another funky year, but I'll say it. On the other, Bob, thank you again. On the other side, there's really only one meaningful tailwind that we see, and this is really, AI likely to be the most impactful economic, broad economic technology we've seen in our generation, likely to be an order of magnitude bigger than mobile or cloud combined. And I think I saw Michael on, so I may ask him to jump in here, because he actually did a couple of interviews on this, but to get his thoughts. I think we've heard a lot about consumer NMT in particular, kind of breaking through from a news point of view, and that's one of the more mature technologies with ChatGPT, as well as consumer ASR that we're all kind of experiencing sort of every day with Alexa or Siri. But it's really these technologies that are coming on the backside of the hype curve that I think are going to be very profound and very big changes in the broader economic impact, and probably a bigger economic lever than we've ever seen before. But Michael, you have been talking about this publicly. Just curious if you want to add some of your thoughts as to where we are. I see Michael Sissions. Be dropped.
He's on.
Oh, no, he's on.
Mute. Yep.
He's on mute. Well, Meryl, just keep an eye on if he's back.
Yep.
Okay, thanks. One of the companies that has kind of embraced what I'd call applied AI, where you're really looking at a very specific use case, and not sort of just the hype of it, but actually applying it. I know, Evan, you guys won a product award recently. Just kind of curious if you want to add what's going on with SignalWire and sort of your lens on applied AI specifically.
Yeah, absolutely. So we've been taking a lot of the recent advances, and we've been following along in it for quite a while, particularly from the audio perspective and from just the NLU angle of it, but partnering with OpenAI and everybody else to make it basically. The long and short is that we realize that building tools in the future are going to be so AI heavy that providing infrastructure to do that from a telecommunications perspective was critically important. So what we did was effectively put together all of the existing LLM things along with a lot of the, whisper style speech recognition technologies, and tie all that together with as low of a latency as we can, which was actually a fairly non-trivial challenge to make this thing kind of sing and hum along, and then wrap that in a user interface that allows people to very, very quickly spin up AI agents for everything from responding to phone trees all the way through dealing with customer service requests things that were entire companies came before can now be done just through like a visual builder through the SignalWire interface. We call them AI agents, and we've gotten a tremendous response from that, from people who both recognize the technology we're using and the limitations of it, but also see a specific application to a vertical they care about, which is their telecom footprint, and how it can really act as both a force multiplier and sort of a game changer when it comes to dealing with people over the phone or in any kind of like auditory context. So we've been very excited about that, and people have been very, very appreciative of it and very, very interested in using it in a lot of situations. Previously, this kind of thing was a very white glove experience, having to build your own models and get them trained. And there's still room for that, where people who like banks and things that need very specific on script and regulated environments, but there are massive opportunities for places that can be a little bit more loose in what the agents can say and how they respond, and can provide a much better quality of service.
Now, one of the things that was really interesting about this chart that we're looking at was how it both enables some market opportunities and also disables them. So interesting that you kind of brought up or alluded to sort of what was happening in around chatbots and how that technology basically was effectively stillborn by sort of this next wave that's coming up right alongside it.
Exactly.
And then, hey, Chris, it's Renee.
Hey, Renee.
For anyone who's interested from the company side, both Google and Microsoft are offering up grants. So for instance, like they gave me 30 seconds. If they're like, if you could get anything funded, what would you do? And we're like, well, maybe an online will registry and an online national will registry. And so now Google is putting up money for that. And then Microsoft is interested in competing with them. So for any of the companies that want to meet any of those folks, I'm happy to make the connections to either Google or the Microsoft teams.
That's awesome, Renee. And can you just unpack like why that national will registry matters to your business and how that connects to AI?
Oh, sure. So for us, what we do is with Gentrio is the online estate planning. And so one of the things that's evolved because more and more estate planning is done online is that it's now the opportunity to, when one passes away, their will becomes public domain. If you have a trust, that's not the case, but for wills, that is the case. And so a lot of the inquiries that we get are people wondering if they can get someone's will or access to someone's will. And we can't give that out unless that person already has access and that the person granted that. But in the past, there was one small company that did some of these things and didn't use any of the technologies that is out there and really relied on lawyers and others to use that technology. But now with the onset of so many digital products, there's an opportunity for folks to revenue on both sides, but folks to kind of transfer those wills over there because we're one of the few that have a digital vault, but put the wills into the registry. And then also there's the opportunity if people find that they might be in the registry to be able to pay for that. And where AI comes in, and then also a bit some of the other technologies, but being able to kind of splice that apart so people only can see what there is relevant to them. And so not giving you someone's full will, but maybe only the portion that you might be mentioned in, because privacy is something that still matters to folks in the way of, you don't want to see who got something, or, when you're trying to go and claim those assets, you only need that one portion. And that actually helps with claiming those assets as well. So using some of the technology there to be able to make it easier for people to translate, update, upload those documents, and then putting it into a place where it could be found and just found what's relevant is proving pretty interesting to a number of the folks that we work with, because we do B2B2C. And so the idea that like Morgan Stanley is excited because now that they could help people find out wealth transfer is something really interesting to them, because a lot of the wealth there's a lot of wealth that's in a few families and places like that, but to be able to find those things and be able to help people locate that fairly quickly, that's something exciting for them too. And it might not be in the will registry. That might be something we could apply the same technology into trust, but being able to help people find information and be able to help people keep it more securely is interesting.
Cool. Luis, I know you've been poking around on this a lot too. I was wondering if you want to add your point of view, and I did put that big wave surfer there picture just for you.
Thank you. I think I have some funky feedback going, but it's just a whole new set of software development being taking place, and APIs everywhere are accessing and accelerating things very quickly. It's exciting to see, the next wave of cloud, cloud 4.0 really gaining.
I think I caught most of that, but yeah. Any other thoughts on how AI is impacting? And I do have those two pictures down there for a reason. One, I think if you're not fully understanding how that impacts the things that you're investing in, or as a company, the spaces that you're in, the danger is really you've got your back to a really big wave. I think that's pretty dangerous. I think equally tricky is having to surf this wave. Because it is a really big one, and it's likely to play out over time. I think one of the interesting things about the chart on the right is that so many of these things really won't mature for another 5 to 10 years, but really need to be working on them now in terms of where our companies are connected. Sorry, I can't see you guys while I'm presenting. Meryl, did you see if Michael's rejoined or no?
Yeah, he can hear. That I know, but he can't get his video or mic. Chelsea's working.
Okay, cool. All right. Moving on. One of the things I did think was a useful time to step back is for Breakaway Growth 1, we've stopped doing net new investments. So we've got the 16 investments that we have in the portfolio. And just to kind of calibrate from an early stage venture fund point of view, where are we relative to where we would expect to be? So I looked at the class of 2008, 2010. So this is Crunchbase data. So there was a little over 1,200 companies that were seed started there. We're now 13 to 15 years later, and you can kind of see sort of how that maturation works. Of those 1,200, half of them got to their second round. Of those, a little over half got to the third round. Of those, a third got to their fourth round, and then you can kind of see that on down. The interesting thing is what is thought to be some of the bigger companies, in terms of real drivers of value, still haven't exited. So it's like Stripe and Docker. There's a lot of companies that have gotten a fair way down into some product market fit, but haven't really been able to accelerate from that. They kind of got stuck. So that's the zombie image down there. And then of those that did start, those just under 1,200 companies, you've got 40 that have exited, for over $500 million, another 30 sort of over $100 million and down. So where are we? We're exactly sort of in that messy middle. Our portfolio's outperforming the benchmark in year 2 to 6, which is great, but it is also some of the hardest time frame for companies to really find their footing and accelerate through. So we're exactly sort of 10 years ahead of that 2008 2010 class. And I'll talk about the company specifics in the next 2 slides. But any questions about sort of where are we? All right. Crazy how long this stuff takes and how fast it feels it goes at some time. So a portfolio performance since we spoke in March, revenues up, which we're glad to see, but growth has slowed. I think that's part of, again, sort of to contextualize the first half. SVB had gone bankrupt, liquidity was tight, companies were really holding on to their cash and being very selective as they should, and trying to understand where liquidity was going to come from and what the outlook is. In talking to our portfolio CEOs, feeling like there's confidence coming back in terms of their ability to plan and execute, but it's still a tricky environment for them. In terms of runway, we're sitting a little over a year in runway, dollar weighted, in the portfolio. Capital efficiency of growth is where we would expect it to be. And the metric I was alluding to earlier, total value to invested capital, now sitting at 1.73, so a little ahead of the benchmark. In terms of up rounds, we've had 9, 3 down rounds, and 4 exits on small positions that were roughly 80 cents on the dollar back on those early exits. Big shout out to Dan and the team at Game Club in particular, who worked really hard to get investor capital back to us. Any questions on this slide? Okay. On the news side of things, a couple things I think worth highlighting. End market, which is one of the larger positions in the portfolio, and over $100 million business, now profitable. They also got recognized as ranked 280 in the Deloitte Fast 500. Growing 463%. So that's something that we're very excited to see them continue to make progress. That's again likely to be one of the first exits out of the portfolio. They've filed to go public confidentially and are waiting for a window that makes sense for them to push through. But the business continues to perform at a very high level. As I mentioned, Michael was on Bloomberg recently talking about AI and sort of where he sees that showing up.
I figured the microphone out finally, Chris.
Yay!
I can't get my video, but I got it. You can hear me.
We can. So just since I was on that, you want to sort of talk a little bit about 2 things I'd love to get your perspective on. One is sort of where you're seeing AI showing up because you're working with so many tech companies at CareerList, and then how you're seeing the outlook on the market given your lens from a talent perspective.
Yeah, so I think in terms of AI, there's, I'm seeing a couple of things. Number one is that there's, every category has a new AI, first startup in it. So, every vertical, every solution has an AI first vertical. A lot of those are struggling to get, significant traction, and they're kind of living in the middleware layer where they're competing against the big platforms innovation. And then obviously every existing SaaS software company we have has, an AI roadmap. Every big enterprise customer we have, has an AI roadmap. So, what makes it, I think, different than other markets that I've seen before when, we saw the rise of crypto or metaverse or Facebook or whatever, is that the ability for big incumbents to quickly do integrations and implement this within their stack. I'm seeing them implement things on a much faster basis within their existing kind of problem set than I've seen previously. So companies you wouldn't expect to roll out from Shutterstock to all the way to customer service support apps to everybody basically has a roadmap. So I don't see as much oxygen for as many of these earlier stage highly verticalized AI startups. Despite funding, they haven't necessarily gained as many customers on a mass basis than I would expect. Obviously there's outliers. And then in terms of the general market sentiment, I think there was some overhiring that happened during the COVID era. There was over expectation of continued sales hype during the COVID era. We're partway through the processing of that. So we're seeing, startups not have money to hire. We're seeing private equity deals slow down. We're seeing much less kind of earlier mid-stage deal flow. And then enterprises are, generally being much more cautious in their hiring, and they're kind of conducting long-awaited layoffs. And, the hiring is ultimately typically being connected to reorganizations. So we're definitely, I would say, no, I don't have a crystal ball, but I think there'll be more layoffs Q4 and Q1. I think we'll see more hiring start back in Q4 and Q1, hiring against the layoff plans. And, we're seeing a lot of recalibration. So the dream visionary CRO being replaced by the operational execution CRO, the big spending CFO being replaced by the cheap and very hard to get money from operational CFO. So it's been a lot of recalibration.
And I know the first half of the year was, tougher for your business given, all of that uncertainty that was happening. Are you seeing things start to unlock in the second half, or still some bumpiness?
Q1 was great. It was pretty good. Q2 and Q3 were terrible. And I think, Q4, the tail end of Q3 here has been better. So we've got more contracts that have gone out in the last week than the previous 6 weeks. So we're seeing, more volume in, coming back in. That's both from new customers and from, existing customers, and from people who are coming back, coming back from holiday and saying, oh, great, I have a hole for, whatever. Great, let's get going. So I think there's going to be more strength in Q4 for sure than there's been in Q2 and Q3 for us. Q1 is notoriously good and sometimes it's misleading. Hopefully Q2 and Q3 are good, good next year. But we need the money to start flowing and money to get a little bit cheaper and more available. But we've got different sectors, like our agriculture business is doing good, our consumer business is doing reasonably. It's primarily hitting our technology and media, hitting our technology and media areas the most, which obviously we do have additional exposure to. But the other, like our ag business and some of the other verticals, have been growing through this period regardless.
Any questions from Michael? I think it's always interesting to kind of cross correlate these data points, sort of Bob's macro markets perspective and sort of what Michael's seeing, on the ground in terms of verticals and hiring. Not hearing any. I did want to highlight a few other things while folks are maybe thinking about any questions they've got. But yeah, go ahead.
Hey, Chris, it's Steve Fletcher. How are you?
Good, Steve.
Good. Hey, I wanted to ask you a question about in-market. You mentioned that the company has filed for an IPO, and I know that in the portfolio, we had a lot of structure on the investment, which was very beneficial for us. Do those preferences get wiped out in an IPO, or do those stay?
They preserve. So our holding in market is through that structure, and that structure doesn't dissolve during the IPO. So basically, post IPO, that waterfall with the structure, for those not as familiar with it, we have a 2x senior preference on the security we hold. And so that will basically, as we get the shares distributed for end market, assuming the IPO, that waterfall holds in terms of how those shares are distributed. So, we would get 2x the shares to the junior preference to us.
That's great news. Thank you.
Yep. A couple other highlights here that I wanted to showcase. And Evan, again, congratulations on the product awards at SignalWire. And I think also, since we spoke last, T-Mobile investment is net new for this table. Evan, you want to talk a little bit about T-Mobile investing in SignalWire and the reason why you guys chose them?
Yeah, absolutely. I mean, T-Mobile, they came down through a firm called Touchdown Ventures, that's their venture arm. They seemed the most compatible of the U.S. carriers we wanted to work with due to the previous investment, which I think this group knows about, from Deutsche Telekom, since they are, similar, same company. So we talked to the folks over at T-Mobile, and we were looking for a U.S. carrier to partner with so we could get deeper inroads into that layer of the telecom infrastructure. T-Mobile also tends to have a much more consumer-focused attitude, and that's something that from our PLG-led motions we're trying to get into. They are very excited about using SignalWire as a jumping off point to develop their own products. I know right now we're working with DT pretty heavily over in Europe to help facilitate them building a CPaaS infrastructure for their own clients One thing I think that the group also doesn't know is that we rolled out for that an EU native version of the entire infrastructure that maintains all of the data integrity and everything else inside the European Union. There's no chance of things escaping. That was a prerequisite for some German telecom laws that came down. And they actually cast about the world looking for a partner to do this and came to us because we were one of the only people that could guarantee a position of the infrastructure that would only be inside the EU and yet have the global reach they needed. And so T-Mobile is now looking back over at them as well to sort of move that into the US. So really excited about having T-Mobile on our side. They've been great partners so far. We go up to Bellevue a lot and talk to those guys. They've got their own agenda, so things move slowly in the world of traditional telecom, but they're great to have at our back. And I look forward to what we can do with them. They are similarly interested in a lot of this future of AI and how it can play into their offerings.
Well, congratulations on bringing them in. That's awesome to hear. And the folks at Touchdown are great partners. So glad that connect worked. I did want to highlight 3 other quick ones on here. It was really great to see Senso get front page of the business section with Tribal Square, Miami Herald on leveraging AI, specifically generative AI in the financial services space with credit unions in the US. So it's a good breakout for them into the credit union market in the United States. And then I think, Luis, I don't know if you want to add anything on sort of Flyers progress, but I know that's been absolutely exceptional. And then Kim Fennell, I know you're on, and I think we had Dave on when we were talking in March, but my understanding is not only have they crossed $3 billion in back orders now at Elroy Air, which is just stunning to be able to say those words out loud in one sentence, but also importantly are starting to get down payments on those units now. So that was just recently announced.
Yeah, I mean, do you want me to give you a couple more
Yeah,
minutes on that?
that'd be great.
Yeah, I went and paid a visit to Dave Merrill and the executive team back in June. And I came away very, very encouraged for on several different things. One, yes, as you mentioned, the $3 billion in orders backlog, and more importantly, they've started to get deposits against those. Most of you that know orders in the airline industry and whatnot, are they're kind of like intention to buy, but these have now been backed up by some deposits, which earn people certain slots. I was really encouraged by the fact that Dave's done a really thoughtful and careful job on upgrading his team. It was already a good team, but we all know with startups, you need to bolt on experience along the way. So they brought in some very experienced senior, they didn't quote unquote, they replaced their head of engineering. He didn't leave the company. He's doing other things, but they brought in a more senior person and head of engineering. They brought some chief of staff people and people that are real, people, companies from like SpaceX and others that have come in are really, really long in the tooth and experience. The other thing they've done is because they're really kind of going after a dual strategy. One is the Department of Defense, and the other is commercial. And on the defense side, they've kind of way overachieved in terms of getting some inroads in there. They've got some orders from them, provisional pilot projects, but they brought on their advisory board there like some incredibly heavy hitters, like people you'll remember from the news, like General H.R. McMaster. He's not only an angel investor, but he's on the advisory board, and there are 2 or 3 others like that. And some of that is through one of their investing companies. And I spent some time one-on-one with Raj Shah, who's the managing partner at Shield Capital, and they're kind of like an In-Q-Tel, but they focus more on Department of Defense as opposed to kind of the CIA type of stuff. So he has leveraged a lot of senior contacts in there. And he was head of what was called the DIU at the U.S. military. The DIU is the Defense Innovation Unit, and so that's the people you have to sell to get orders. So we're incredibly well connected in there. And then on the commercial side, that people had like Fred Smith, the founder of FedEx, coming in and paying a personal visit to review the the factory, and they've provided input on the cargo carriers that would be used for this, and they've made a lot of progress on and kind of think about this autonomous driving for the actual cargo units that go and get picked up by the VTOL. So anyway, there's a lot deeper information on that, but it's very exciting in terms of both the technology and the progress on the deposit side. Financially, they are, on the fundraising side, they've extended it. Another note, we kind of invested, I think our original one was around 24 million valuation. But they've just they're working on what they call the $275 million safe, but existing investors got a break on that one at 225 million. So that kind of gives you a current feeling for valuation. Their expectation is they'll do a Series B later this year. And we don't know what the pricing will be, but the whisper number, what they're hoping for is something in the $400 million range. Anyway, we all know that doesn't mean anything until there's an exit, but that gives you a little bit of sense of trajectory. So I'll stop there.
Awesome, Kim. Thanks for the update and spending all the time you are with Dave and helping him out. I know he really values that time from you.
Good.
Luis, did we get you back on Flyer? Did you want to give an update there? Or
Yeah, I'm here. Is my mic working okay? Can you hear me okay?
Yep, you're good.
Might be my Starlink having transmission issues. Thrilled to be investors in Flyer Labs. Similar to Elroy, the team has been upgraded significantly. For perspective, today there are 700. The company is on track to do 85 million in revenue this year, is forecasting 150 million in revenue next year. And what I think is most exciting about the company is that they have several multi-$100 million deals in very serious contract negotiations with top airlines. One, in fact, it could be a huge one. So for the next couple of years, this company could continue to grow very nicely. I think could go public and could steal meaningful market share from Amadeus and Sabre, which are the two current public companies servicing this customer base. So really executing on all cylinders. The CEO has done a fabulous job. Our investment, as it stands, is about a 10x markup, but really has the potential to continue running from there. And as Kim said, it's really doesn't matter until there's a real exit, but thrilled to be in that one. And I think it's going to be one of the rhinoceros companies in our portfolio.
Awesome, thanks. Any questions for Kim or Luis on those two companies? I did also want to give a shout out to Renee because she was on the big board with NASDAQ, which was very cool to see. I don't know how I'd feel about being a couple stories tall though, so maybe have mixed perspective on that one.
The better part is that we have the verbal from Morgan Stanley to partner with us, so that's the better part.
Do you want to talk a little bit about that and why it's so impactful? But yeah, that's awesome.
Yeah, so we were part of their innovation lab, and so Morgan Stanley is an investor now in Gentrio, which has been great. And then one of our board advisors now is the head of partnerships for Morgan Stanley, and now he's heading up the Morgan Stanley at Work program. And so working with him to build Gentrio into the Morgan Stanley at Work program. And then the Morgan Stanley stuff we used to parlay into other things. So we literally about 5 minutes ago signed an agreement with Principal Insurance. It's a very large company out of Iowa, and they have a new offering called Elevate. And so Gentrio is one of the premier focuses of that, but that kind of stemmed from some of those relationships. So exciting on that part. And then a few other things that have come out of some of those where they're reseller agreements. And the one thing I have to ask before people drop off is that if anyone knows how to sell, we have a credit card company that wants to use Gentrio, and they have 300 million customers, but they want us to price Gentrio, and I need help on that because it's due probably later today, and I don't know how to price that, but they're like cents on the dollar, but it's how many cents on the dollar can we get, because, well, it's a huge number. So if anybody knows anything about that, I need help on that, but that kind of came out of the Morgan Stanley work as well.
That's very cool, Renee. I'm going to connect you with Robert Olensky, who's spent a lot of time in the credit card space.
I can email. I'll email Robert. Okay, yes,
Okay.
That's brilliant.
He knows.
Okay, I'll email him because I appreciate that. Thank you.
Yeah, he knows how you make money on a part of a penny over 300 million users. He's definitely your guy.
Thank you. Perfect. Thank you.
Yeah, no problem. Okay, just a couple of slides more to finish up. Appreciate those updates. So this is kind of where we are coming out of the summer of 2023, and I'll talk to some of the numbers, but we've got some companies that have clearly kind of broken out, which is very exciting. But they're still going to need to raise capital to get to their full potential. We've got other companies that are still working on product market fit that are also going to need some capital. From a fund point of view, we're stopping doing net new investments in terms of new companies, and so it's really supporting the portfolio of 16 companies and getting them to full value. And I'll talk a little bit about this damn image and the market correction and the dry powder behind. Probably inappropriately picked when I was drafting this, so apologies for that, given what's happened in Libya. So I'm going to move past that slide. So growth financing, just to give you a sense, early 23, and then pick up on activity and sort of the backdrop. Really want to draw your attention to the images on the right here is probably the easiest way to look at it. If you look at reserves across US VCs, they're down about 15 billion. So these are reserves to support existing portfolio companies. So it's down to about $114 billion. That may seem like a negative sign, but I'll get to something else in a second. But they're all sitting with $6 billion set for new investments. And so for our portfolio, which is really a seed portfolio that's growing and maturing, that's going to be bringing in net new investors into that. It's actually a pretty good sign. So there's a little over $280 billion in dry powder sitting right now. And if you look at the accumulated dry powder coming into this cycle, it's the biggest it's ever been, substantially bigger than it was pre-COVID. That being said, I think LPs are looking at that cumulative amount of capital and wondering what the return is going to be on it. And so for VCs that are trying to raise new funds right now, they're struggling to get those new funds done. It's probably one of the harder environments to get new funds done. And so I think that's where we see this really kind of weird dynamic where the VCs are sitting on more committed capital than they've ever had, but are a little bit hesitant to actually invest it. And I think that will start to work itself out as we get into 2024, in part because all of it's got a ticking clock on it and they really have to get the money to work. And so for our companies that are performing, I've got high confidence that there's going to be lots of opportunity for them to raise capital as we go into next year. Any questions on this slide? Okay, so from an outlook point of view, markets continue to have uncertainty. So I call it the funky year. Multiple factors, which we had talked about, leading to restricted access to capital. Companies with proven solutions in production for what I call applied AI, I think are going to continue to see acceleration, and they will not struggle to attract capital, talent, or sales. But I think people are getting pretty sophisticated about understanding whether or not it's just a story in slides or if it's a real business lever in the business. And so the sophistication is going up very quickly. We're in the middle of the maturation stage for our portfolio overall. Some really great signs from a number of companies that are breaking out right now, and a number that are still working on product market fit. And we're going to have our next call, Resilience Call 20. I can't believe we hit the 20 mark on the series, but that'll be on March 15th, and Meryl will get the date out for you. For those that have gotten capital calls, so that's really tied to us stopping the investment period for net new names. So we've got a capital call out in aggregate for 1.2 million. 100,000 of that, just under, is going to fund expense, and part of that is also going to fund admin. And so for those that were familiar with the pain that we had with Assure, which unfortunately ceased operations, which was our fund admin out of Utah. We're moving to Carta, which is a much more capitalized and I think well-known fund admin to everyone. But the process to move that over, finish accounting and audit, and to get tax statements, everyone, apologies again that's taken as long as it has. But really, Nick, I think, has been talking to the Assure folks with over like 1,000 emails cumulatively, trying to get out of Assure and move us over to Carta, which has been just a little bit painful. That capital call will also align all of the LPs in terms of your pro rata ownership of the overall portfolio, and then we're going to have a $600,000 reserve to selectively invest in those companies where the risk return looks attractive for the fund to increase some exposure, and don't anticipate doing another capital call for a year. That's one of the other things that I'd heard from our LPs is, do one capital call and try to minimize incremental capital calls going forward. So we're in the middle of the maturation stage of the portfolio. You probably inferred from what Steve's question on end market and that confidential filing that they've made, that's probably likely to be our next exit. Again, with capital markets still being a little bit uncertain and the IPO window being a little bit uncertain, not clear. And then our next call will be March 15th. I think, yep, that's it. Any questions?
Hey, Chris, it's Steve again. Could I trouble you to just say a little bit more about the roll-up process? When you complete this, will everybody be getting one ownership stake in an overall fund as opposed to
Correct.
owning stakes in one through X SPVs?
Correct. Yeah, we're just basically trying to simplify that all into one fund structure.
And Chris, have you guys done, so if we hold things in individual companies at this point, like have you guys done anything in terms of tax implications of the roll up, in terms of moving those holdings around? So if you're in 9DB and you're rolling into something else,
Yep.
years later from a value perspective, have you guys done the kind of the tax work around it all at this point?
Yeah, so we're rolling everything over at cost, and so there's no implied unrealized gain involved at all. So from a tax perspective, we believe we're good. But again, we're working with Carta and an accounting firm to ensure that, and we'll get back to you guys if anything comes up that looks like it's an issue. But right now, it does not look like there are any issues on that front.
And Chris, you're working on getting some K1s out, I hope.
Yeah, again, Bill, because of the move from Assure to Carta, I don't anticipate being able to get those K1s out to everyone as we normally would, in the September timeframe. And so my guess is we're going to get them out late this year, so early December or early January. The good news,
Chris, but unless there's been a meaningful distribution from the companies, the K1s aren't really necessary, right? I've heard conflicting views on this.
Correct. That's correct, Luis. I've been going through each investor's K1s as we've gotten these requests for the late info. The vast majority of our SPVs have $0 in change year to year, and so with most of those, there's no tax implication. The only ones that have anything are the handful that have a little bit of accrued interest income, which doesn't have any current year tax implications either.
Yeah, that was my second.
For people, Nick, for people who were not in the SPVs, so we will not be getting a K1?
That's correct.
Not for last year, Bob. That's correct.
Yeah.
Right.
Okay,
Well,
I'll tell my tax guy to stop pulling his hair out then.
Thank you. Listen, I do want to pause and just acknowledge, the founders that we've got that are kind of navigating this. So, you know, Michael and Renee, you know, Evan, you know, I know it's a tricky environment, and you know, this being the 19th conversation about navigating tricky environments, just deeply appreciative of all the hard work that you all put in every day, and the businesses that you're building, and just privileged to be your partner. I know this group of LPs is more engaged, I think, you know, than you'd normally find in a venture fund, and they're all trying to help in any way they can. And, you know, keep those questions like the one you asked, Renee, coming, and we'll endeavor to do everything we can to get you answers.
Yep. And hey, Chris, I put in the chat. A friend of mine just ran like a big AI conference here in Boston, but he's done a really good job. And he came and taught for Bob at Bob's MIT class on AI and stuff. But his name is Paul Bear. He's a great guy, and he really cool way to keep up on what's going on out there, just with his newsletter and things like that. And just subscribe for the free one. That's all you need right now. So. You won't like that part of the introduction, but he's a good guy to keep on top of.
I just grabbed that link, and we'll send that link out to everybody too. Renee, thanks for adding that in. Because I think we're all collectively trying to stay as smart as fast as, you know, as much as we can, as fast as we can. It is moving. All right, everybody. I think we're at time. Thanks again for the time, and I'm happy to catch up before. But if not, we'll see you March 15th, and enjoy the rest of the fall.
Thanks so much. Thank you, everybody.
Thanks, everybody.
Thank you, everybody.